What's up, guys? Welcome to Mortgage Market Monday here in the trenches with Marshall Sparkman, your niche mortgage broker, Nashville's #1 mortgage broker, bringing communication to lending. So let's talk about what's going on in the market out there. So November mortgage credit availability report per the Mortgage Bankers Association saw a reduction in mortgage credit availability, meaning less people qualified. It was mainly due to lower credit scores and non-owner occupied. Non-owner occupied because there's a lot of changes going on in the market. I could do a whole video on that, but just know that a lot of investors are starting to pull back from non-owner occupied. There's starting to be some defaults due to COVID. Tenants didn't have to pay their rent, so landlords just letting the houses go. There's more to it than that. I'm not going to go. I don't have time to go into it. Also, jumbo lending, according to this report, is at a high. So we got a lot more people buying bigger houses. Imagine that. Inflation is at a 30-year high, man. Come on. So they just announced in November that the year-over-year inflation rate is 6.8%. Let's think about that real quick. Show me one thing that has only increased 6.8%. I'm waiting. Okay, exactly. So is the 6.8% an average, which would mean some things shot way up and then other things came down? No, that's not the case. I don't know anything that's come down in price. Has anything come down in price? I don't know where they come up with that 6.8%, but it's not what I'm seeing in my world. I'm seeing more of like a 40% to 60% increase on about anything that you buy. All of our stuff's coming from China now, and they're all backed up ships, so that's kind of affecting the market. We're curious to see how that all shakes out. So also, the government came out and said they're going to do faster tapering of buying mortgages. So right now, the interest rates are really low, or they have been, because the government is coming in and they're buying up all these mortgages, right? So they're going to slow down buying mortgages. They're going to start letting the mortgages go back to the open market and let these hedge fund conglomerates buy up mortgages, which is going to drive up rates, okay? So be expecting to see that next year. They're already starting to announce it. The market's already starting to respond to that. So you're going to hear more next year about in 2022 about non-QM. We used to call it subprime loans back in the days. Now they call it non-QM, which stands for qualified mortgage. As a mortgage broker, I'm one of the only people out there that can offer non-qualified mortgage loans. So I got an array of mortgage products that I'll share more about in another episode. That's not what this one's about. I don't have time again. So Biden nominates Thompson to be the FHFA chairperson lady. So some of the things that were on the table before with the previous chair that I suspect she's going to carry on. It's going to be very interesting to see if Fannie Mae and Freddie Mac become like public utility companies. That was the proposal from the previous guy. So let's talk about that real quick, and I'm going to keep it brief due to time constraints. The Fannie Mae and Freddie Mac were privately held, publicly traded companies, and the government comes in and takes over. It's the first time the government's ever done a hostile takeover of a business. Imagine if you're a business owner, let's say you work for Keller Williams, for example, and the government came in and shut Keller Williams down and said, we're taking over this company, you're out of here. It's pretty much what happened to Fannie and Freddie. So now they're talking about keeping it into government conservatorship, that's what they call it, because it's making so much money. It's unbelievable how much money these guys are making on the market. So the government's getting smart, and they're talking about taking that over. We'll see what happens. I don't know if it's a good or a bad thing. It'll probably keep rates low. I really don't know. We'll see what happens. Case Shiller Index shows a 19.8% growth, and they're showing that that's decelerating, that's declining. All right, look, man, let's be real. Like, it is not healthy for the housing market to be increasing at 20% per year, okay, right? Everybody would agree with that, So a healthy market is about 5% per year. It's a steady increase. So I think that's what we're going to see. I think we're going to see the 20% increase on housing prices year over year start to decelerate, and the market switch from a seller-heavy market more to a balanced buyer-seller market that's not just absolutely absurd. So I think we're going to start seeing more of that this year. House prices are going to continue to go up, but they're just not shooting up. If you were to take a graph, it's not shooting up. It's kind of a more stable rise. So Hopefully this helps you guys. Interest rates, real quick, last but not least, currently, according to the Mortgage News Daily, who publishes the national interest rates, the average 30-year fixed on a conventional loan right now is 3.2%. 15-year is 2.55%. These are averages. Takes into account some people are buying down, some people are not. Anyways, FHA loans average right now is 2.75%. Jumbo loans average 3%. And so hopefully that helps you guys. You know, you can go into ARMs and all this other kind of stuff. If you ever need to know what rates are, just get on Mortgage News Daily, and they track it very, very well there. So hopefully this helps you guys. If you need any help from my team or I, we are here to serve. I'm out.